Hey traders, Todd here. This is the free video update. This is going to be for Monday, July 13th. And actually, this is going to be an earnings trade for pre-market on Tuesday, the 14th. So I'm just kind of giving you a heads up ahead of time. Here's what I'm looking at. I want to be trading JP Morgan into earnings, and I'm actually going to be leaning more towards the short side. We're going to be selling premium in a pumped up volatility market pre-earnings, and here's the setup. So we're looking at the daily here, and we have a nice first wave up, second wave correction, a beautiful wave 3, and you can count a nice 5-wave subdivision. I don't have it labeled, but it's 1, 2, 3, 4, 5, so that's perfect. That makes up 3. Now the game is to figure out how far wave 4 will go. And one of the ways you can figure that out is you figure out the amount of time that lasted in same degree wave 2, right? So I've done this ahead of time, and basically this one lasted 21 days. So 21 days is a minimum amount of time that you'd expect to go by in wave 4. Traditionally, wave 4 lasts longer in time than wave 2s. Wave 2s are sharp and to the point, just like we saw. Wave 4 tends to be choppy and sideways. So basically what I've done is taken the Fibonacci time extension tool here on TOS. I measured out time elapsed in wave 2, high to low, and then projected it up from the end of 3, which is the beginning of wave 4. 618 was on July 7th, and 100% is on the 14th, which is earnings day, right? So that's the minimum amount of time wave 4 should last. More traditionally, we get out past the 1272, up to the 1618, 2, and even the 2618. So basically, wave 4, I don't think is over. I think this is just the first wave of wave 4. We'll probably do like an A wave down, B wave up, and then we'll do a C wave. So let me just draw that in for you. And this ties into the earnings trade. Stay with me. So you get down in A, probably a false break, a gotcha trade up in B wave, then we get down in C, and that's when you start getting out to the 1.618 and the 200% time relationship compared to wave 2. Okay, so what that means is I think there's going to be a false break into the earnings. All right, so let's go from the daily over here to the 1 hour. All right, if we think there's going to be a false break up, how do we figure out where that's going to be? Well, simple. We've taught this in our classes many times. You start off with finding the highest blue dot. That's going to be the beginning of your major swing wave. Okay, and then you're going to go down and do a retracement to your lowest blue dot. All right, so 23% is out, 38%, that's out. We're looking at 50 as a potential stopping point, 618 and 786. Now, you can also do this with the other blue dot. So we can do a retracement of this blue dot to blue dot. So basically you're looking at 2 major swings, this swing as well as a smaller degree. So you can kind of stack the zone. So I'm going to do a smaller one, and I'm going to change the color to differentiate them. We'll set it to purple. Okay, fine. All right, and now we're just going to start looking for an agreement between these and figure out where we have a potential stopping point. Okay, drawing. I see a potential stopping point. There's a pair right there, and there's a good 3-level zone right there. All right, so that's going to be our stopping point. Now, we have obviously all day tomorrow to trade, and then depending on where we close is the zone I'll be using to trade. You know, this is only a zone of about $1.30, so it's 67.50 to 68.85. Those are going to be my zones, and probably what I'll do is sell a call credit spread like if I can do 68, 69, you know, break even will be right around here. Okay, so I don't expect it to get too much above here, then drop away. And I'll do that in the weeklies that expire Friday, so I'll have some time. So I don't think the market's going to get too much above 68.85 unless it's blowout earnings, then go down, chew up some more time on the clock, and get out towards that longer-term time objective in wave 2, which is July 27th or even August 3rd. Okay, so basically we're playing a bounce off this B wave, and if earnings, you know, aren't able to rally a stock up, there's a very good chance that it's going to be a false break, and we'll go down and see. All right, guys, so that's the trade. Hope you followed that. There's a lot of kind of moving parts there, but that's how you set up. You know, that's how you have a plan going into earnings, and letting Elliott and Fib kind of help you with that game plan. All right, guys. Good luck. I hope that helps. If it did, please give us a like on the YouTube video if you wouldn't mind. Again, that helps us rise up in the YouTube rankings, and there's a lot of material on there. Very much appreciate it. And if you'd like to get these videos daily, go ahead and subscribe. I'll put the button up there for you. Have a great trading week. Earnings underway. Volatility's here. Getting fun. Talk to you guys soon.